right, so here we go with a Chapter 12 problem that's pretty similar to one of your homework problems. Okay, so we've got Sharon Incorporated, and they're headquartered in state X, and they own 100% of these other entities. Okay, and they form this single group. All right, we've got a list of operations in the corporations. Okay. And then you're asked to compute several things. You're given that for state X, there's a tax rate of 15%. And we're asked to calculate state X apportionment factors for Sharon, Carol, Josie, and Janice. Okay. We're asked to calculate the business income apportioned to state X in particular. We're asked to calculate the taxable income for state X for each company, and then the tax liability for state X for the entire group. Okay. So when you have a multi-part, multi-state problem like this, the best way to go about it is to create a chart. Excel works great for this. And so that's what I've done here, and we're going to move over and look at that, and I'll go through where I got each of the answers in that chart. All right, but first, let's look at what we were given. Okay, so we are concerned with state X. So we need to really focus in right now on state X so we can kind of get an overall picture. Okay, so Sharon Incorporated. All right, they've got sales in state X, they've got property in state X, and they've got payroll in state X. So they have nexus. Remember that property and payroll, right, is what creates physical presence. Okay, so so you got to make sure they have nexus in that state. All right. So then we look at Carroll Corporation. They have sales in state X, they have property in state X, and they have payroll in state X. Okay. Now we come over to Josie Corporation. We've got sales in state X, but look, we've got no property and no payroll, okay, in state X. All right. So no property, no payroll, no nexus. Okay. And then let's look at Janice. Janice has sales, Janice has property, Janice has no payroll. Okay. So what do we know? Well, we know that Josie, if we're in Sesame Street, which one of these things is not like the other? Well, Josie is not like the others because Josie has no nexus. Okay, so that's important to recognize. In state X, Josie has no nexus. That's important to recognize as we move on. Okay. So let's move over to my chart here. Okay. And the first thing we're going to look at is A. A says calculate the state X apportionment factor for each of these corporations. Okay. So we've got to calculate the state X apportionment factor. All right. And I've got these calculated here. Okay. But let's go through how we got there. All right. So we need to look at each company separately. Okay. And so you look at sales per state, and then the total sales, okay? And property per state, and the total property. And payroll per state, and the total payroll. Okay, so that's Sharon. So we looked at Sharon. So let's go back and let's look, okay? And we'll sanity check all of that, okay? So what did we do? Well, we looked at sales for state X, okay? And we said the sales for state X was 70,000. And if you remember from my other screen, total sales were 100,000. Well, that's 70,000 plus 20,000 plus 10, so 70 plus 30 is 100,000. Okay, so that's how we got our sales number by state X over the total. Okay. Okay, so now what's the next step? Well, the next step is we need to look at the percentage of sales, right, in state X for Sharon Corporation, because that's the entity we're working on, all right? So where does this 0.7 come from? Well, remember that sales in state X was 70,000, and our total sales, right, are 100,000. So that ties to 0.7, okay? Now, for Sharon Corporation and State X, we're going to do that same thing for property, okay? $50,000 of property in State X, $100,000 of property total. So now that's where that 0.5 comes, okay? Payroll. What do we know? Well, we know that all of the payroll for Sharon Corporation is in State X. So their payroll factor is 1, okay? Now, what do? Well, 3-factor apportionment, okay? So add all those up, that gets you to 220, okay? So now, what is their apportionment factor? You're going to take that 220, you're going to take those totals and divide by 3, and that's how you get the apportionment factor, okay? All right, so now we've figured out the apportionment factor, right? So then all you do is you multiply this apportionment factor by the income, and that gets you to the $36,665. I don't know why that was so hard. So that's how we got that, okay? All right, additionally, you can see that, so let's go back over here, okay? And remember that Sharon Incorporated had $1,000 of dividend income. And remember that our group, Sharon Incorporated, is domiciled in State X, okay? So that's very important, because then that $1,000 of dividend income, all right, gets allocated to State X as well, all right? So then Sharon's state taxable income is the percentage of their apportioned income plus their allocated income, okay? Now, we're going to do that same apportionment for each of the other entities, all right? So we've got, remember, sales per company for State X over total sales, right? Okay? And so we did that for sales, property, and payroll, okay? And that gives us these percentages again, okay? And then remember, you total up those percentages for sales, property, and payroll, okay? And then this 0.5429 divided by 3, because 3-factor apportionment, gives us our apportionment factor, okay? Then we multiply our income, our business income for that entity, for that, for their total business income, by their apportionment factor, and that gives us their apportioned income, okay? Remember that Josie doesn't have Nexus, so there is not income apportioned to State X because there's no Nexus, okay? Now, what do we do for the last portion of this problem? Because we were asked to find taxable income, all right? So that's your 37,000 plus your 5,000 plus your 2,222, okay? State tax rate, we were given that. That's that 15%, and then that's your state tax liability, Okay, so that is the large comprehensive problem that is very similar to your homework. All right, hope that helps, guys.